We've seen the biggest gaps lower in the market this year. Daily opens have been all related to trade. And usually within a couple of days, we've recovered that ground, if not that day. So I think it's more bark than bite. But from each of these individual occurrences is unimportant by itself, but together and over time they add up. And we use the analogy, it's like a Jenga tower. Early on in the game, it's easy to pull these bricks out. But over time, each brick becomes more important, and you never know which is going to be the actual event that really sets things off. So, but I don't think we're anywhere near that point yet.
If you look at the stock market, one would say that the U.S. is winning this trade war in comparison to the pronounced losses we've seen overseas, specifically in China. And even looking at the S&P 500, 70% of the earnings come from the United States. Could that in itself be a reason that the U.S. market continues to outperform? Yeah,
I think that's why we're holding up well here. The U.S. economy is doing well, and so we have a little bit of slack, so to speak. Any negative implications from the trade tariffs are offset by stronger growth that we're seeing. So I think on that respect, the U.S. is holding up better, but we haven't been able to make much headway at all this year. We've been stuck at 28. Every time we get up to 2,800, the market pulls back. For a president that's so concerned about the stock market, it was just ironic that Trump came out with this new $200 billion in tariffs yesterday, just as the market was hopefully going to get above 2,800. So
I had those same thoughts. It's so ironic. You pay so close attention, and then boom, it all falls apart. Well, as we head into earnings season, what are your expectations? Because that could be a tailwind, and that's what a lot of folks are focusing on, saying put trade aside, earnings are strong.
Right.
Yeah, so it'll be good to be able to focus on company fundamentals again and get away from these distractions. And what we're seeing is, while earnings estimates, growth forecasts are very high, we've seen analysts pulling in forecasts a little bit. So we're seeing slightly more negative revisions heading into the earnings reporting period than positive revisions. And what we tend to see historically when that happens, that it sets the stage for a good earnings season. People say it sets the bar low. But historically, when we see that happen, it's good. That contrasts to January Q4 earnings season when analysts couldn't have been more bullish and were boosting forecasts, and we saw the market correct 10%.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.